From the trading floor of the CME, Mr. Topstep brings you the daily futures recap exclusively for Options Profits.
From the floor of the CME Group, this is Danny Riley with today's closing print. You know what? Say hello to the end of the third quarter and the end of September. You know, the way this has looked is that they've been selling the losers all week, and now today they're buying the winners back. Now, you know what? We've been saying for several weeks about how this has been working, how the price action is flip-flop. You know, Mutual Fund Monday used to be the buy day. Well, we've been pointing out for several weeks now that Monday, Tuesday, Wednesday, they send the S&P down, and then coming into Thursday and Friday, they send the S&P up. Basically, that's what we've been seeing down here. The high of the S&P came in at 1444 even late in the day. The low came in at 1430 early. Last were 1441 even. We're up 14.1 handles. That's a lot. Total volume here, we've got 1.75 million minis traded, and we've got about 8,000 S&Ps traded in the pit. 22 of the Dow 30 were for sale. MOC, we had 850 million for sale. Tomorrow we got personal income, we got Chicago PMI, we got consumer credit, we got Dallas Fed President Richard Fisher speaking, and then one last thing. We want to talk about, I got to let Jason Carter out here. One last thing we want to talk about is it's called the walkaway trade. It's something that the Pitbull and I have been looking at for years. And that's where the mutual funds and the investment firms tend to buy the S&P into T+3. But right into the end of the quarter on Friday, they walk away from their buying on about 12 o'clock or 1 o'clock Central Time, leaving the S&P susceptible to a little bit of a sell-off. We don't know how that'll play out, but that's something that we've been looking at for years. We'll see it tomorrow in the opening print.